Oh, hello, hello.
Live, Johnny, if you wanna do my offer.
What does that mean? I can't hear you.
Hey, Johnny.
I know.
I was just letting you know that we're live, so don't pick your nose or anything.
Oh, okay.
We'll get started in
How'd you
just
know
a few
that's my
minutes.
favorite thing?
Well, I know you're a great picker.
Ah, ha,
So about 5 minutes here. Let's
Okay.
listen to the jams here.
I got some cool charts to show everyone here today. I'm gonna set up my slideshow before we get started. Okay.
We'll get started
How'd you know that's my favorite thing?
Well, I know you're a great picker.
Ah, ha.
So about 5 minutes here.
Okay. I got some cool charts to show everyone here today. Set up my slideshow before we get started. Well, the good news, everyone, is that the S&P closed out at its highest weekly level in history. So we're going to talk about how that's bullish with respect to breakout strategies. Well, the good news, everyone, is that the S&P closed out at its highest weekly level in history. So we're going to talk about how that's bullish with respect to breakout strategies. Hey, Neil, I'm hearing like a playback audio after I speak. It's about like 30 seconds lagged. You have not missed anything, PC. We haven't even started yet. Yeah, Calgary, West Virginia, Bethel Park, Pennsylvania, Boston, Germany. You're smart, Jason Madsen. Trading stocks is more important than Ohio State versus Michigan. Wayne, Indiana, Hawaii, Nevada, Maryland, the Rockies, Georgia, Playa del Carmen, Mexico. That's where I went to spring break in high school. Minnesota, San Antonio, New York. What's up, Joe Espinoza? India, California, Berlin. Orlando, Spain. Channel Islands, UK. It's awesome. Greece. Where in Greece, Paris? Toronto, Maryland, London, Wisconsin. I think we pretty much almost covered all 50 states. Probably at least half in the US. Lars from Qatar. KC, Missouri. Iowa. Navytown, Norfolk, Virginia. Phoenix. Brooklyn. Paris. Paris. Philly. Dominican Republic. Montreal. That's Montreal, by the way. Oh, Nicola Pigozzo from Italia. Benvenuti. Michigan. Aurora, Illinois. New Orleans, Louisiana. Newport Beach, Rhode Island. Tampa. I can't even keep up with all these. We got Anastasia from Greece. Ria from Oklahoma. Thessalo, Paris. That's from Thessaly. Thessaloniki. Gregory asks, where am I? I am in Metro Detroit. I live on Insula Magna. That means big island in Latin. Figure it out.
All right, we are 1 minute past the hour, Gianni. How's it going?
I'm doing very well, Neil. How about yourself?
Doing wonderfully. I didn't know you could do so many accents.
Oh, yeah, a little bit.
You are a man of the world. So guys, everyone, thank you that came here a little bit early. We're still going to let folks trickle in a little bit before we get into the meat. I'm Neil. I'm going to get out of Gianni's way in just a second.
Neil, your volume's a little low, just FYI.
Oh, you know what?
Your audio.
Boom, how's that?
Much better.
All right. So we're about a minute past the hour. I think we'll give it just one more minute before we really get into the meat of the conversation. A lot of folks already know you, Gianni, but for those that don't, would you mind introducing yourself?
No doubt. So my name is Gianni DiPoce. I am here in Michigan. I spent about 6 years in the financial industry. I worked in the advisory space. I was the head trader for a $250 million portfolio at the time. I worked pretty closely with the institutions due to the size of our shop. So I kind of learned the ropes from many of the pros, you know, your Fidelities, your Vanguards, your Schwab type people, and kind of learned how they play the market. And through trial and error of my own, at the beginning, a lot of errors, but through time, you know, you start to pick up on some tips, incorporated some of the institutional strategies into my own. Really focusing on the advantages that we have as individual traders versus, you know, operating at a larger scale. So developed a pretty unique strategy that has served us very nicely in the last couple years. And I'm here to share with you some of those tips here today, give you some education, some ideas, and hopefully you will decide to ride with us going forward.
All right, cool. Well, we are at about 3 minutes after, so I think we might as well just get started. What do you think, Gianni?
That sounds good to me. I'll go ahead and share my screen. Just need you to confirm that you can see my laser pointer and the screen.
We've got screen and pointer. Check.
All right, very good. So hello, everyone. We're going to talk about how to trade breakout stocks today, okay? My name is Gianni DiPoce, as I mentioned. I'm Benzinga's breakout strategist and the editor of the Breakout series, which is a service where we give you periodic trade ideas to capitalize on stocks that are about to break out, and especially the ones that fulfill our criteria. So what are some of the tools and concepts that we use to find these stocks and to you know, gauge our risk reward ratios appropriately to make it in the market over the long run? Well, the first tool that we use is technical analysis. This is the study of price and momentum indicators, things of the sort. We're basically operating from the premise that human behavior is reflected via price. Okay, so there are price patterns that go back. You can observe them hundreds of years, even longer, and they don't change because human behavior doesn't change. There are cultural differences around the world, no doubt, but at a fundamental nature, human nature is pretty much the same. So we use technical analysis to spot opportunities ahead of time. History doesn't repeat, it rhymes, and the best forecaster for the future is the past. And the next point that we use technical analysis for, which is probably the most important, is for risk management. You need to ask yourself this: if you are early to trading, intermediate, or even a pro, if you're just getting into it now, do you want to be right or do you want to make money? Okay. What if I told you that you can afford to be right just 1 out of 4 times and still come out ahead and be a profitable trader? If you manage your risk reward properly, that is possible. So technical analysis is a very valuable tool that helps us skew the odds in our favor with respect to risk management. Another premise that we operate from in terms of technical analysis is the entire notion that sentiment follows price, not the other way around. So it's been a year now. It's pretty crazy how, I guess it depends how you look at it. Some people, it's been a long year. Some people, the year has flown by. But we're about a year away now from the Corona crash. The market bottomed on March 23rd, 2020. And, the whole reason I bring that up is because sentiment follows price. Go back and look at some of the news articles around that time, and the world was ending. It was going to be a hyperdeflationary spiral. We did see hyperdeflation in crude oil, but that was just in one market. But, that was the best time to be buying stocks. And so sentiment is a lagging indicator, not a leading indicator. And as traders and technical analysts, we try to focus on setups that are going to give us leading indications of what a market might be doing. And the last premise here that I like to mention, because it ties into technical analysis as well, is that there's a natural order to our world. I'm an urban farmer as well. That's what I do in the warm season up here in Michigan. I'm about 2 weeks away from my first round of planting under the road cover. And one thing I've learned over the years, having been growing food and tying some of those very principles into market analysis and speculation, is that there are no coincidences in nature. Nothing happens in a vacuum. What happens in one market or in one asset class is going to have a ripple effect and carry ramifications over into other spaces in the market. So one of the big things recently we've seen is interest rates rising. That has led to, new spaces or new sectors in the market starting to catch, pretty nice bids after, lagging for multiple years. So we'll touch on some of that later in the slideshow and talk about, what are some of the things that we look at to make those, to come to those types of conclusions. So the good news about chart patterns is that once you learn them, you can apply them to any market that you trade. So I trade stocks and commodities, well, stocks and futures. I trade my commodities, through the futures market, but you can trade all types of markets with futures, the indices, the bonds. I traded bonds for a while too. But I mainly trade stocks and futures. But these chart patterns are applicable to all markets. So whether you're, trading the Forex market, you just want to focus on crypto, get these patterns down, because once you have this in your toolkit, they become invaluable and you can use them for all different markets. But the two types of patterns that we want to focus on here today are continuation patterns and momentum patterns, because after all, we are breakout traders, especially with respect to equities. So these are the categories of price patterns that we want to focus on most. There's another one called reversals, but again, we're not talking about, picking bottoms or selling tops here. That's a topic for another time. But I want to show you today how you don't even need to buy the low and sell the high to make a pretty good living trading stocks in this market. So let's cover a couple of the continuation patterns, and then we'll highlight the momentum ones, and I'll show you some examples. So the continuation patterns, we have the triangle family is what I like to call them. We have the ascending, descending, and symmetrical triangle patterns. We have the rectangle pattern. That one kind of carries over into the momentum one as well. And then we have the ascending and descending price channels. All right. the momentum patterns, which are the Benzinga breakout series bread and butter. We have the saucer pattern, the broadening wedge, which is one of my favorites, by the way, probably because I don't see a lot of other analysts using it. And it kind of is like one of those secret sauce things, the less people that use it, the more secret of a sauce it is, right? We have the cup and handle, made famous by renowned trader and investor William J. O'Neill. He actually founded Investors Business Daily. That's a really good pattern that I guess he came up with it. I mean, I'm sure if you went back in time, it was observable hundreds of years ago as well. Then we have the bull flag, which is a nice pattern too. I think I have one example of that here today, and the rectangle pattern. So without further ado, let's talk about some actual chart patterns. So here we have Fubo. Okay, this is a daily chart, Fubo TV. This has been a really popular stock, being covered by a plethora of analysts in recent months. But how many analysts do you know that were actually talking about Fubo last summer or, early fall when it was trading around, $10, $12 a share? Well, this is a stock that we put out for subscribers of our weekly service, the Benzinga Trade Alert, Breakout Trade Alert, and we identified a saucer pattern. Okay, so right here in my laser pointer is a saucer, and it's characterized by an upper horizontal trend line that acts as resistance, and then a parabola U-shaped lower portion of the pattern, okay? And so this pattern is confirmed. A breakout occurs when prices close above the upper horizontal trend line of the pattern. So we flashed a buy alert for subscribers back in early October, and we closed above that. Let's see, it was like 1220, I think it was, and we ended up running up almost 200%. I think ended up being like a 190% gain in like not even 2 months. It was a really, really good trade for subscribers and myself alike, to be honest with you. And look where I flashed a sell signal. We didn't sell at the high, but I mean, are you really going to be upset about a 190% gain in 2 months instead of a 250% gain? Because look what happened after prices peaked. We sold 2 days before the high. Prices gapped down and basically collapsed. What was the high there? We peaked at like 60, dropped down. We fell like 60% in a matter of 2 weeks. So, it's one of those things. You don't always need to buy the low and sell the high to make a pretty penny. And, that's a big takeaway I want you to have here today. So again, the main purpose of this chart here was to show you the saucer pattern, upper horizontal trend line, lower parabola U-shape. Let's take another look at an example here. This is Insmed Inc. Okay, so this is actually our most recent publication of the Breakout Opportunity Letter, the monthly service. This was our most recent pick. So I'm sharing with you our most recent pick that we put out just a couple weeks ago. So this is a biotech company. This is a weekly chart of this stock. This is a saucer pattern. Now you might say, well, why isn't it a rounding bottom? Because, this pattern takes up pretty much the whole, the whole chart. Well, there's a saying in trading, when in doubt, zoom out. We're looking at a weekly chart here, but if you look at a monthly chart, you'll see that this multi-year consolidation is part of a larger, broader uptrend in this stock, okay? Another takeaway I want you to have from today is the saying, the bigger the base, the higher the space. Look at this saucer pattern. It goes back to September 2017, and it's over 3 years old now. So we already closed above the upper horizontal trend line. Look how many times prices came up against resistance. 1, 2, 3, about 4 times until we finally broke above it in August of last year. But prices haven't really taken off yet. Okay, so this stock's been very kind and is giving us an opportunity to still get in at a favorable risk reward level, right? So we have a buy point on this. It hasn't triggered yet on a close above 40.55. So whenever that triggers, that's the buy, right? And then you want to set your stop loss within 7 to 8% of the buy point. So this is another example of a saucer pattern. It's a stock I really like, and it's something that we shared with subscribers recently. Let's take a look at another pattern here, the broadening wedge. Okay, this is Cooper Tire and Rubber. This is a daily chart. And we have an upper horizontal trend line in this broadening wedge that once again is acting as resistance. The secondary portion of the pattern is a downward sloping lower trend line. Okay, the buy point once again is when prices close above resistance. So we flashed a buy alert for our elite subscribers on this one in early February. And I think it was a buy on a close above like 42 or 53 or something like that. The exact number escapes me. But that occurred, that triggered in early February. And, you know, to be honest with you, I never even heard of this company before, but turns out they got bought out by Goodyear Tire. You've probably heard of them. So the stock gapped up over 30% in a day. And we issued the sell signal because they said, you know, Goodyear was going to offer them like $55, $56 a share. And so, you know, once the stock reached that point, I was like, well, there's not really a point of holding this anymore. And, you know, we've pretty much gone sideways since. So this was another 30% plus winner for subscribers just in the last month or so. This is an older example, Snapchat. This is from last summer. This is a weekly chart. And here again, we have the broadening wedge, upper horizontal trend line acting as resistance. Okay, we see that prices were rejected 1, 2, 3, 4 times before we finally cleared the breakout mark around the, I think that's like $17.5 mark. The exact number escapes me right now. But once again, we have the lower downward sloping trend line acting as the secondary portion of the pattern. The buy occurs when we close above the upper horizontal trend line. So on this pick, we came away with a 60% plus gain in less than 2 months. So not bad. Now, we did sell a little prematurely. But again, you know, I showed you some other examples. I'd rather lock in some of the gains than have those gains evaporate. And I'll show you some other examples of, you know, selling right on time and selling, you know, prematurely as well. And at the end of the day, you have to make a judgment call. You know, are you going to be happy with, you know, an 80 or 60% gain in a couple months, or do you need that extra 10% that might come if you hold the stock, you know, a few weeks more? But at that same time, you know, you're carrying risk of further downside, right? The longer you hold it. Cup and handle pattern, alarm.com. This is a daily chart. And the cup and handle, okay, so once again, we have an upper horizontal trend line acting as resistance. We have the cup portion of the pattern that is a larger parabola U shape. You see how prices kind of stay within this parabola, okay? And then we see prices rise. We start to test the upper horizontal trend line acting as resistance again. And then we see a tighter parabola U-shaped portion that is the handle of the pattern. The buy point, once again, is on a close above the upper horizontal trend line. So we flashed a buy point here for subscribers back in late November, early December. That triggered, and we ended up coming away with a 30% plus gain in about 4 to 6 weeks. Okay, so you see here we have this, we see that prices made a higher high in January, but with a lower RSI reading. You know, that's usually not grounds to abandon a long position by itself, but what happened here? We had a breakaway gap down and closed out near the lows of the day. That's a very bearish signal. Okay, so we told our subscribers, hey, we probably should get out around this time. You know, the risk reward ratio is not really in our favor anymore. And look what happened. We traded a little bit lower. Might have felt a little dumb for getting out early as we rallied, you know, into early February. But what did we do? We made a secondary lower high. Okay, and then we have exceeded our exit point to the downside pretty significantly since then. So this was a textbook entry and exit, 30% gain in about, you know, I think it was like 4 to 6 weeks or something like that. So not bad at all. Let's take a look at an ascending channel continuation pattern. Okay, Upwork. This was a very rewarding stock for us in the last 12 months. I don't have the other pattern here, but we got long this stock in July last year as well. We were already in, you know, before we had this big gap up. So that was very welcomed. And then we saw a consolidation within this ascending price channel, basically between November and January. So we said, hey, let's get long on, you know, a higher closing high. And we did that. That trade triggered in late January. And this one, you know, we only came away with around a 20% gain. And we got stopped out in mid-February. But, you know, one of the strategies we do that we employ is that if a stock is rallying very strongly, we'll sell into strength. But one of the most damaging things that can happen for a trader's psyche is to see a large gain turn into a loss. So one of the rules that we employ is that once we're up on a stock about 12%, we'll raise our stop loss to break even. Another saying that I didn't come up with, but I like to share, is that let your winners run and cut your losses short. So we're constantly raising our stop losses to reduce our exposure on a stock. And that's exactly what happened here on Upwork. We got stopped out as prices fell below our certain risk threshold. So, we were up over 30% at one point, but we got stopped out in late February. We had some choppiness in the market. Chop City, I call it chop suey too sometimes. A choppy market's really tough because you get false breakouts, you get whipsaws. It's not good, trending environment, and that's where you can lose money is in consolidations, especially if you're trying to trade breakouts. So you need to be very cognizant of your risk management at all times. So we got stopped out here, and prices are pretty much, they've done nothing. I mean, we fell lower, and we're still, we're pretty much a little bit lower than where we got out of on this stock. So this was a good exit in this Upwork stock. Descending channel, Riot Blockchain. I know this stock has taken off with popularity recently. We noticed a descending price channel in early January, flashed a buy signal on a close above this gap right here. We already emerged from the descending channel. We closed above that mark. Ran up. We had almost a 200% gain, but the price at one point we had that much, but the price corrected so quickly it barely even gave us enough time to raise our stop loss. So we came away with around 100% gain on this one, a little more than that in about 3 weeks. So this was a big winner. But again, on this descending channel, we see how prices trade within this range. Okay, one takeaway I want you to have from today is that volatility will compress before it expands. Okay, it contracts before it expands, and then vice versa. You can't think linearly in markets. You have to think cyclically. Okay, volatility compresses before it expands. In addition, so that's, what was I was going to say something else about volatility. Oh, that's right. Volatility, it comes on both sides, right? So what happened in the last month? We had, major, volatility short term. I mean, prices really didn't break down that much in the indices, but, we did see a lot of whipsaws in some of the high beta, high flying names. A lot of the leading stocks were down 20, 25% in like a week. One example being Riot Blockchain. So, keep in mind that when you're trading the high flyers, it comes with nice upside, but there's a lot of downside risk too. So all the more reason why you should be raising your stop losses to protect large portions of your gains as the stock appreciates. All right, let's take a look at a bull flag / symmetrical triangle price pattern. This is a weekly chart of Fulgent Genetics. And so a bull flag is characterized by two portions of the pattern. First, you have the establishment of a flagpole, and that's when prices surge a significant amount in a short amount of time. So that happened on this one. Let me see here. I'm trying to, my taskbar's in the way here. I think this was in, I can't see the date, but in any case, read this. What's that?
You're looking for the date?
Yeah, what is that?
You're looking at probably the first or second week of July.
Okay, so early July, we saw this flagpole established, right? And then we see a subsequent consolidation. Okay, look how, in this case, you can make an argument it's a pennant, but symmetrical triangle all the same. We flagged for the next few weeks, okay? And then we bought on a close above the previous highest closing high. We came away with around a 40 to 50% gain, but look how early we got out. We sold the week. We sold in, we sold right here, and then prices surged up like another, 30, 40%. So
that's yeah. So it looks like you you sold in right before February.
Yeah. So that was unfortunate, but you know what? I showed you some examples where we sold and the stock ended up doing nothing for the next 2 to 3 months. So, one alternative strategy that you could do is sell half your position, scale out, sell 1/3, sell half, leave a runner, reduce your exposure, sell half of your gain, and then let the remaining position just run and see how high it goes. In hindsight, that would have been the ideal strategy for the stock, but hindsight in 2020, you can't always, buy the low and sell the high. Let's take a look at an ascending triangle pattern. We have an upper horizontal trend line, once again acting as resistance, and an upward sloping lower trend line. And we see how volatility is once again compressing. Look how tight the range gets as we approach the apex of the pattern. So we flashed a buy signal on this stock in July of 2020. We got long, came away with around a 50 to 60% gain in September, October. We got out. This one continued higher, but it wasn't really a high flyer anymore. I still kind of like the stock, but I don't really see an ideal price pattern. You can make an argument that there's an ascending channel, but yeah, in any ways, I wanted to show you this stock for the ascending triangle purposes. Look how volatility compressed before we got to the apex, and then you broke out above the upper horizontal trend line. Okay, these triangles, whenever you see an ascending, symmetrical, or descending triangle, they are continuation patterns. Continuation pattern means that it resolves in the direction of the underlying trend, generally speaking, right? So what do we see here? Higher highs and higher lows. So when we observe a continuation pattern, we can come to the conclusion to a fairly high degree of probability that we'll see a resolution to the upside. So that is why we employed bullish strategies on this stock, Enphase Energy. All right, so I went through a bunch of stocks. Let's take a look at the S&P 500. This is a daily chart, and this chart actually comes straight from our elite service, which is where we give you updates 3 times per week. We give you up to 9 picks per week, minimum 3, depending on the market conditions. But you'll get 3 to 9 picks per week, generally speaking. And but we also provide you with an index analysis. So this is a chart of the S&P going back to June 2020, and look at all these price patterns that we see. Go back to June, we see a cup and handle. You look in August, we have an ascending price channel, and then we had some volatility within Q3 into Q4 of last year, some wider trading ranges. We developed a saucer pattern. We actually had a price target of 39.50 on the S&P. We were calling 39.50 on the S&P back in October because we observed the saucer pattern. That was achieved in February. So, again, showing the usefulness of technical analysis. We then rose in November and December. We formed this ascending price channel. We broke below that in January, but what did we do? We formed a higher low. We then went up and formed a higher high, and then we had some volatility that we just talked about in late February, early March. But once again, we did a higher high. Now, my biggest concern, and I think this will be mitigated shortly here, is the bearish divergence in price in the RSI indicator. Look how prices are making a new high, but the RSI indicator is not confirming that high. That is a sign that upside momentum is waning. And, there's been some bouts of volatility, but nothing too extreme. My guess is that we're going to see an overbought reading above 70 on this subsequent rally that's going to ensue, because the S&P just closed out at its highest weekly and daily levels in history this past Friday. That's a definition of a breakout. The S&P is in breakout mode. We need a serious reversal to change our outlook on that. Basically, we need to close below 38.80. If we have a couple gap ups here from earlier in the week. If we close below these gaps, then it's actually a pretty strong sell signal. But my hunch is that we're going to see a breakout follow suit very shortly, especially since we, by definition, just closed at a new high, which is what a breakout is. All right, so you're probably asking, Johnny, that's great. Thanks for showing us all the examples, but how do you find these? Well, there's 2 ways to find these types of stocks. There's 2 approaches, bottom up, top down. I know a lot of successful traders and analysts that are bottom up analysts. They look through thousands of charts on a periodic basis, and they try to find themes among the strength in the name. So they'll say, hey, I found these 20 stocks that I really like the setups. 7 or 8 of them seem to be in the technology sector. Another 5 are crypto related. And then, 3 of them are banking. There seems to be a lot of strength in the tech sector and in crypto. There must be relative strength there. But what I like to do is I like to employ a top-down approach. So I like to look at the broader sector trends and try and narrow that down, right? I want to be long the strongest stocks within the strongest sectors. And so I'll also show you a couple tools that we use to find those types of trends. But, since we're using a top-down approach to markets, there are four main asset classes to watch, and we call this inter-market analysis. And so we're using different markets to come to conclusions about other markets. Certain markets, like I mentioned, nothing happens in a vacuum. What's happening in one market will affect another. Recently we've seen interest rates go up. We've seen inflation-sensitive sectors really start to catch a bid after underperforming for years. Tech has benefited from the deflationary trade. Falling interest rates is an indication of deflation. Now tech is actually starting to underperform, and I'll show you a little bit what I mean by that on the subsequent slides. But there are four main asset classes to watch: currencies, rates or bonds, stocks, and commodities. They all affect one another. And now, this is kind of, something I've been mulling in my mind recently. Is crypto worth being its own asset class? In theory, you could say it's a currency, but it's got over $1 trillion market cap now. You're seeing a lot of institutional money come into that space. And we'll look at an example of Ethereum later on when we talk about breakouts, how to come to those number conclusions later on. But for the sake of this presentation, we're going to assume we're investing in the USA. But, to go on a quick digression, what a currency is doing, if the US dollar is underperforming, for example, which it has been, caught a bid these last couple of weeks, but since March 2020, the US dollar has declined. Foreign stocks have done a little bit better than domestic stocks, and that's the reversal of a trend that we saw. The US was the best place to be for equities, but emerging markets finally caught a bid. Foreign markets, Asia has been doing very good in the last year or so. But that's how you need to look at, markets if you want to look at markets from a hedge fund manager perspective. But like I said, we're going to focus that we're going to assume that we're trading the US market only. That's going to be our focus for the sake of this presentation. So what are the strongest performing sectors in the US? Well, it has been tech, communication, biotech, consumer discretionary, but I think that's changing. I think we're about to see an outperformance of value and inflation sensitive sectors. And I'll show you some charts that lead me to believe that in just a few slides. But what we do after that point, as we find the strongest performing sectors, we dig in and we look to see what are the strongest stocks within those sectors. So tech has done well, consumer discretionary does well. Amazons, your Teslas, your Apples, those have been the market leaders, the FANG stocks. I know you've heard that before too. Because what we're looking for ultimately is relative strength, okay? Relative strength works two ways, and I'll show you some visual examples, but we want to be long the strongest stocks and the strongest sectors, but we also want to be long the stocks showing the best relative strengths that are holding up the best in the face of a market decline. So we welcomed this recent correction in late February, early March with open arms because we were able to see which stocks held up the best in the face of broader equity weakness, okay? Because many times the stocks that hold up the best during those declines usually end up being the leaders when the rally picks back up afterwards, okay? So here's a quick slide. I'm not going to spend much time on it. These are the spider ETFs, and you'll see why these are important on the next slides. But we have XLC, communication, XLY, consumer discretionary, XLP, consumer staples, XLE, traditional, conventional energy, XLF, financials, XLV, healthcare, XLI, industrials, XLB, materials, XLRE, real estate, XLK, tech, and XLU, utilities. Take note of this slide, but if you don't take note of it, you can find it easily on any given search engine. Okay, welcome to the world of ratio analysis. This is how we find relative strength, by conducting ratio analysis. I do this type of analysis on stockcharts.com. I change the settings. I get rid of the candlesticks. I just use a line chart. I put the sector above the S&P that I want to analyze. So I put the sector, in this case, it's the tech sector against the S&P. So it's XLK colon over SPY. Well, what do we see here? This is a secular trend. Tech has been the leading sector in the market going back years. Okay, higher highs and higher lows. Look at the upward sloping trend lines. But what do we see here recently? Okay, we see this rectangle pattern and we broke below it. So if we don't hold this upper sloping trend line here. Put it this way, tech has been underperforming since early to mid-February, okay? Now we broke below support as characterized by this lower horizontal trend line in this rectangle pattern. If we break this upward sloping trend line, we could see a massive unwind of the overweight tech trade. Okay, you've heard growth outperforming value. Tech's been a large driver behind that. And why has that happened? Because of the deflationary forces within the market. Interest rates declined from October 2018 until March 2020. Interest rates peaked at the peak of the Corona crash, right? Now bonds are in a short-term bear market. I mean, we've still got a lot of support. And plus, the Fed is still in their QE infinity program, but there's some concerns, no doubt. I mean, inflation expectations are at 13-year highs. In other words, at their highest level since the 2008-2009 financial crisis. And on a quick digression here, interest rates are affected by three factors. You got inflation is one, number two is demand for money, and number three is risk premium. The first two right now are firing on all cylinders, and I think we're going to see the third factor really start to pick up steam in these next few months here. But let's take a look at this, value growth trend that I just talked about, right? So chart patterns still apply to ratio analysis. Okay, so we talked about the saucer pattern earlier, but you can flip that upside down and make it an inverted saucer. Now, you could even make a case that this is a rounding top. A rounding bottom would just be this flipped upside down. But you can see here the ratio that's rising. It means that growth is outperforming value because we have the growth index against the value index. When this ratio is falling, it means that value is outperforming growth. Okay. Now, when this ratio is falling, it could also mean that if growth and value are declining simultaneously, it could also mean that growth is declining less than value. Okay, so that's the nuance here. The big key here is that as long as this ratio is rising, the growth sector is outperforming value. So if this ratio is rising, growth is outperforming to the upside and outperforming to the downside. If this ratio is falling, value is outperforming to the upside and outperforming to the downside. So what do we see here? We broke below support on this rounding top pattern. We had some pretty wide bearish divergence in price from the RSI indicator. I mean, this is a pretty significant development. We could see a retest of this former resistance, now support. And if so, I mean, that's going to be a massive unwind. You're going to see some massive rebalancing amongst the large institutional entities in the market. I mean, the Dow is outperforming the NASDAQ now. That hasn't happened in a long time. That could be a cautionary signal, or it could be an inflationary one. It remains to be seen. But you have to respect the hand that the market plays you. Okay, so this kind of ties into the value potentially outperforming growth theme going forward. Ratio analysis can allow you to spot emerging intermarket trends. So right here, we have the energy sector, conventional energy, XLE against the S&P. This was a sector that was absolutely thrashed, by the broader market overall. In other words, there was no reason to own any energy-related investments, traditional energy. Solar power and renewables did very well, by the way, but conventional energy has not done well. But what we see now is a broadening bottom pattern. Upper horizontal trend line acting as resistance, downward sloping lower trend line. And look where we are now. The ratio is starting to peak up above this resistance. We made a new high. We exceeded the high back from June of 2020. We could see energy start to outperform, and that would be a pretty significant development and would be further fuel for the inflationary pressures that we're starting to see in the market. So again, ratio analysis kind of giving us a heads up what might be coming for this market, at least under the hood, and in terms of sector underperformance. Outperformance, not underperformance, sector outperformance. Okay, now we also take this a step further because I mentioned earlier, strongest stocks and strongest sectors. We use this ratio on stocks, individual stocks against the S&P. So what we have here is the ratio between U.S. Steel, which is a value stock, right? It's a steel company, value company, classified in the value sector. And we see here again that the S&P has outperformed U.S. Steel significantly going back from February of 2018. But what do we see here? A rounding bottom, upper horizontal trend line acting as resistance, nice parabola U-shape. And what did we do? The ratio closed out at its highest level since February 2019. Big development here. Is U.S. Steel going to be one of the leading stocks in this value rally within the S&P? It's sure looking like it now. I mean, this ratio, this rounding bottom is projecting a ratio as high as back to the 2018 highs. So you can see some real alpha generated in the value sector. Now, when I say value is going to outperform, that doesn't mean I think growth or tech stocks are going to crash. Again, we're talking about ratios and relative performance. It just means that value and inflation sensitive sectors will give you bigger bang for your buck than tech. That's all it means. Tech could still rise. It probably will rise. It's just that you're not going to get as much portfolio alpha from tech than you would from value or inflation sensitive sectors. Okay, so the chart patterns aren't all we use. We talked a little bit about the chart patterns and relative strength, but we also look for signs of accumulation. We want to see more buyers and sellers. So we analyze volume, and trading volume represents the number of shares traded within a given time frame. So you have weekly volume, monthly, daily. The volume is all the amount of shares traded within that time frame. When there's more buyers than sellers, quite simply, there's rising prices. When there's more sellers than buyers, there's falling prices, quite simply. If we are buying breakouts, right, which is the entire purpose of this discussion, we want there to be more buyers than sellers. Short squeezes are our friends too. The public had a massive education on what short squeezes were when we had the GameStop and AMC manias. Looks like they're coming back again a little bit, funny enough. But what happens when a short squeeze? When you short a stock, you borrow the shares from someone that has agreed to hypothecate or collateralize their shares, right? And then when you want to close your position, you're doing it with the intention of buying it back at a lower price than you borrowed it from them. So when you cover your shorts, that creates a flurry of buying activity. And a lot of times you'll see these stocks that are irresponsibly shorted, consolidating. I don't know, like what these, institutional guys are thinking sometimes. I mean, I'll see these stocks in uptrends with multi-month or multi-year price basis consolidations, and the short interest would be like 60, 70%. And then the stock breaks out and they all have to cover, and you see these massive price appreciations in a short amount of time. That's the short squeeze. And so we use the 20-day exponential moving average. You might have noticed a little red line at the bottom of our charts on the volume bars to tell us whether significant volume activity is taking place. So if we see volume start to rise above the 20-day exponential moving average on rising prices, it's a pretty good indication to us that accumulation is taking place, which is exactly what we want to see from the long side. So let's talk about actually timing the breakout, because time is not money. Time is precious. We live in a fiat monetary system where money is infinite. I mean, after all, we just passed a $1.9 trillion budget. Where did that money come from? Well, the Fed monetized the debt, right? That's the name of the game. Time is more important than money. Time is finite, okay? So an improperly timed purchase of a breakout can damage your risk-reward ratios. And again, you've heard me harp on risk management the first half of this discussion, and we're sticking with that theme. So when we want to time the breakout, we have to recognize that closing prices matter the most. There's a saying in trading that goes, rookies trade the open, pros trade the close. If you don't believe me, look at an intraday chart of a stock. You'll see a spike at the open and a spike at the close. The opening price activity is when the rookies are trading emotionally, based off the pre-market activity, which has little to no bearing on the actual direction of a stock. The end of the day is when the pros and the algorithms trade. So I want to trade with the big dogs. I want to trade with the people that actually have the buying power, the deep pockets to move the price of a security. So by definition, I kind of alluded to this earlier, an upside breakout occurs when a market closes at a new high above a level of resistance or above the previous highest closing high. A downside breakout is just the same thing, just flipped upside down. Occurs when a market closes at a new low underneath a level of support or below the previous lowest closing low. The nuance here is that there are different breakout price points for different breakout time points. So a breakout on a weekly or monthly level, not only is the price point going to be different, but it's actually more significant because the longer the trend, the more powerful and significant it is. So you might see a short-term downtrend, lasting a couple weeks within, an intermediate term or a long-term uptrend. The good rule in trading is the longer the trend, the more powerful it is. Okay. So you might see a breakout achieved on a daily scale, but not on a weekly scale. And then it just turns out that the market's just going to continue its consolidation. So we look to see, bigger, broader breakouts. Again, the bigger the base, the higher the space. The flip side is the bigger the top, the bigger the drop. We look for multi-month price spaces, ideally, to pick our breakouts from. Okay, so let's look at Ethereum. I've been doing these webinars now for a few months, and we've been covering the daily chart of Ethereum. And the analysis we've done has been pretty well. So let's see here. So we go back to June of 2020, and we observe an ascending price channel here. Okay, so we have the upper horizontal trend line acting as resistance, upward sloping lower portion of the trend line. We see the volatility compresses, and then it eventually expanded. So how do we find the actual breakout price? Well, we look within the pattern and we ask ourselves, what is the highest closing price that we can see within the pattern? We noted that that was at 248.44, and that was in late May, early June. So to keep it simple, we'll say, okay, let's get long on a close above 250. That was achieved in late June. Prices then subsequently ran up. We then built a nice price base between, August and November, and we had a saucer pattern, upper horizontal trend line acting as resistance, lower parabola U-shaped portion of the pattern that we talked about pretty extensively already. And then we asked ourselves in, late October, early November, what is the highest closing price within this saucer pattern? Well, we saw that it was 475.99. So keep it simple, stupid, right? The buy point is going to close above 476, and that was achieved on November 12th. And look at this awesome run up that we had. You could even make a case that there was an ascending triangle right here too. Okay, you see where my cursor is? You see how volatility is compressing the upper horizontal trend line. We ran up again, and then we created another ascending triangle, upper horizontal trend line acting as resistance, upward sloping lower trend line, indicative of the compression of volatility. We did issue a reduction of our long signal of our long position in early January, but we got long again because we noted this ascending triangle pattern, saw that the highest closing price within this pattern was at 13.92. So we said, hey, let's keep it simple. Let's buy and a close above 13.95, and that was achieved on February 2nd. And here we are once again, Ethereum pressing up against former all-time highs. Still bullish. I think Ethereum hits 2,500 at least. We'll see where we go, but higher highs and higher lows. We see the continuation patterns. The trend is your friend. So if we see a continuation pattern within an uptrend, we're going to lean with the side that it's going to resolve to the upside. So, okay, Neil, where are we at time? Actually, we got about 15, 20 minutes left.
I mean, I like to usually keep these to about 45 minutes. So I think, but Gianni, if you have more content, actually, this is like your ending slide. I see the smiley face.
Yeah.
That tells me that it's almost time.
Yes.
So folks do have some questions about the subscription. So I think now is a really good time to explain those. So I just want to jump in really quick and let folks know how it works. At the first level, and we definitely have some beginners here, and some folks are asking some slightly more advanced questions. So I think we have a good range of experience levels here. So I just want everyone to know that this service that we have made with Gianni is designed to be as friendly as possible. So there are folks asking like, how do I get into blue chip stocks because they're so expensive? Well, it's a really good question. It's also a very beginner question that a lot of people ask. And my answer to that is it's not about how much the stock costs. It's about what percentage you're going to make when it moves.
Yep.
So most of the stocks that Gianni is talking about, would you agree, Gianni, they're kind of like in between $10 and $100, or is or is there sort of like a mean or average price of the stock?
That's a great question, Neil. Generally speaking, to answer your question, yes. So one of the things I learned while I was in the industry is that most institutions won't even touch stock until it gets above, the $15 mark. Okay, there's always going to be exceptions for that, especially if a fund's, stated objectives is to buy low price securities. But a lot of the, institutional entities that have the buying power to move the price of a security won't even look at it until it gets above 15. So you'll notice that a lot of the stocks that we put out, usually, I'd say 80% of them are above the $15 mark. I like to see the stocks in the sweet spot between, $30 to $15. But again, that's a generalization. That's not a hard and fast rule that we employ. Because there is a psychological element to that. As you brought up, the blue chips are expensive. It deters people from getting into them. But, high price stocks are high priced for a reason. It's because there's a high demand for them. And what creates higher prices? High demand. So I look for the sweet spot stocks between, let's say, $15 to $50 a share. But again, as you said, Neil, the key is percentage appreciation, not the price itself.
Okay, well stated. And I just want to get this out of the way too. Everything that you ever buy from Benzinga, barring like maybe our t-shirts and our mugs, sometimes I'm actually not sure about the policy on those. Everything has a money back guarantee. For the breakout service with Gianni's picks, which it's all the research done for you, it's all the picks done for you with explanations of how he came to those picks and how he's choosing his trades. So you're getting that ongoing education. That's a 14-day money back guarantee on that. So if you're not liking it, just email us, newsletters@benzinga.com. We'll give you your money back. No problem. No harm, no foul. And we hope to see you at the next webinar session or around town, But what I will say, though, is that Gianni there's 3 levels when you get in. The first level is designed to not overwhelm you. That's Benzinga opportunity. Benzinga breakout opportunity. We don't want to overwhelm you. It's about $6.55 a month. All right, it's cheaper than Netflix for great trade picks. When you purchase it as an annual subscription, it's 30% off right now. You should see the link. Again, it's got the money back guarantee. But I recommend just going through that checkout and then grabbing the second one that you see after you check out. So after you check out, you're going to be offered the alert service for weekly alerts. You're going to get 4 more trades per month. I recommend at least getting the first 2 so that you can get some actual trades in to see how you like the service. If you like the way Gianni explains things, if you like the way that the watch list works for you, then you can make a more informed decision as to whether you want to stay with us or not. Highly recommend it. And then honestly, guys, we have designed this. We are trying to make the most affordable trader-friendly service on the planet. So we know what others are charging, which is thousands of dollars. Like when you add on the 3rd level, which we call the elite subscription tier. So that's 3 trade ideas on top of everything you already have per week. All right, so it's 3 more per week. When you add that on, that's only like $355 per year, which comes down to, I don't even know what that comes down to per month, but it's like $30 per month, whatever. A little bit more than Netflix. You're going to get all of these trade ideas with all of this education. And I'm here to tell you, if you're looking to make money in the stock market, looking at this as an investment, this is a very small investment comparatively. So if there's anything that you're looking to invest in early on, it's definitely education. And if someone's going to tell you how they're finding great picks and provide you their free research, I can't think of anything better than that. And I personally have learned a lot from Gianni. And Gianni, I don't know if I've told you this, but I've been using your picks a lot. And one thing that I like to do, I know that you don't talk about this in your service because you like to keep it simple, but I trade options. So I will take the picks because I like having a breakout stock. I like seeing a big breakout, and then I'll day trade the options during the breakout because I just want to magnify my returns. And so like I'll be in a meeting at Benzinga when I'm supposed to be paying attention, but I'll actually be day trading Gianni's picks. So you guys, that's really how it breaks down. So let's take some questions specifically. And again, guys, you got to have the opportunity to get alert, and then to get the elite, you have to have opportunity and alert. So it stacks up. You have to have the first, the second to get the third. And yeah, so I guess the question we get all the time is like, are these optionable? Totally. Johnny, we get these. I'm gonna preempt some questions here. So like, if you guys have more questions about the subscription, I will stick around to answer those. I'll be that guy. Gianni, we always get the questions about how did you learn all this stuff, and it's like what books to read. And I know you got your slide ready, so go ahead and let us know your learning resources.
Sure. So first and foremost, experience is the best teacher, right? So you can read all you want. Theory is one thing, application is another. But there have been some very good books that I read on trading that have totally changed the way that I approach markets. Most of them are technical based. The first one is Technical Analysis of Stock Trends by Edwards and McGee. That book was written in the early 20th century, and it's pretty cool because they're showing examples of charts and the chart patterns on those charts from like stocks and companies from like the early 1900s, stocks that don't even exist anymore. And you see those same patterns and how, the human behavior hasn't changed through time. Another good book is Technical Analysis on Financial Markets by John Murphy, Intermarket Analysis by John Murphy, How to Make Money in Stocks by William J. O'Neill. Then you have the ultimate book on stock market timing. This is a volume series by Raymond Merriman, volumes 1 through 5. That's an excellent series too. And I would say those are probably the books that have impacted me the most in terms of actually developing a method, learning how to analyze, and learning how to manage risk, because that's something talked about pretty extensively in those books too. But again, like I said, experience is the best teacher. I myself, I never paper traded. I probably should have at the outset. I've been trading now over 9 years, and the first 3 to 4 years I didn't make any money, and then I started working with some people that knew more than me. If you don't humble yourself before the market will humble you. And so yeah, I paid my trader's tuition. You start to become numb to the pain of losing, and you're like, you know what? If I want to be in this game for the long run, then I need to develop a system and stick to that system. The ability to stick to a strategy matters more than the strategy itself. And if you want to approach trading like a business and you want to make some serious money out of this, you have to recognize that all businesses have expenses. Losses are inevitable. You have to view your losses as a business expense. Okay. Show me one business in the world that has no expenses. It just doesn't exist. You have to view your losses like that in trading. So those are the main books that I like, and I highly recommend you check those out. There's a lot of free resources online. Benzinga is always putting out good content. I think they put out the best free content out of any media organization in the financial world. You have stuff like stockcharts.com. They have a nice educational section. I think TradingView has some of that stuff too. There's a lot of free online resources, and there's been a trend within the financial community of the democratization of finance, for better or worse. I'm not one of those financial gatekeepers that looks down on people trying to get in the market. At the end of the day, we're all in the market to make money, and it's like this was highlighted during the the GameStop and the AMC fiasco. Like all these people were like, oh, these people are going to get burned. They shouldn't be in the market. Well, what does that say about them? If you were such a good trader, wouldn't you want people to sell your shares to? Right? I mean, this is a marketplace. There's no discrimination in the market. It doesn't matter if you're a pajama trader, in the heartland, or in the countryside, or a hedge fund bigwig in New York or Chicago. You have the same bid-ask orders, and the price is all that pays. So that's why we like to focus on price, and that's why we use technical analysis. As Neil mentioned, I try to keep the content educational. I want you to earn while you learn. This isn't like traditional education whereby you pay money. Sometimes you have to borrow money, and you sit in a desk, for years at a time, and it might take years before you see an ROI. We're giving you actionable trade ideas. So, again, there's the research, there's the books, the learning. All of this is factored into the process and the decision making. And I want you to make money. I want us all to make money together, and that's what we try to achieve with this. So earn while you learn. Just keep that in mind.
Very good. All right, guys. So any additional? So Gianni, while we have you here, I just want to get the books into chat. So I got Technical Analysis of Stock Trends. What were some other titles?
Technical Analysis of Stock Trends by Edwards and McGee. We had Technical Analysis of Financial Markets by John Murphy. Intermarket Analysis by John Murphy. We have How to Make Money in Stocks by William J. O'Neill. And then we have The Ultimate Book on Stock Market Timing, volumes 1 through 5 by Raymond Merriman.
Okay. I typed that as quickly as I could.
Yeah.
All right, there you go, guys. All right, Gianni, thank you so much for spending this time with us on a Saturday. I'm going to let you get back to your thing.
Thank you. I have to go look at all my charts.
Yep. I know.
And by the way, Neil, it's 313 day, and we're in well, you're in Detroit. I'm in Metro Detroit. So, how timely of us all to be together on this day.
Yep, I know. It's funny how those things line up, man.
Yeah.
All right, thanks, Gianni.
All right, take care.
All right, guys, you got me here for just a little bit. I'm gonna be the Q&A guy. You got any questions? Let me know. The service link, I'm just gonna drop it. You guys should have it. I mean, let me know if you can't find the link, but it's in chat. This is completely different than Benzinga Pro. Benzinga Pro is a software that you use to do your own research. This is research done for you with very friendly explanations. So if you're the type of person that's saying, I don't want to do all this research, I don't want to have to figure out how to use all this technology, just tell me what stocks are good. You're the person that we have heard for years at Benzinga, and we got a hold of Gianni to design this service for folks that are just looking for a little help discovering opportunities. That's why we called it Breakout Opportunity. And we worked very hard to make the price as low as it can get. The discount, we try to make the discount available just for the day of the session. So like right now it's like $60 something for an annual subscription for the first level, which again, guys, I recommend getting the first level and the second level. Normally it's 97, but that's already like kind of steeply discounted. We actually, for the first few months of doing this, it was, with everyone involved, paying people, we were operating at a loss. It took us a while before we got momentum with enough subscribers before this actually became a good business for us. But we love it now. The link to sign up, I'm getting asked for the link to sign up. Let me drop that in there for you. To see the second level, it's called Breakout Alerts. We call it alerts just because it's more frequent. Everything they're all alerts, right? You're getting an SMS text, you're getting a text message and an email every time Gianni has a new pick. You're going to get very simply his entry price, his exit price or his target sale price, and a stop loss price. And then you're going to get a link to go to a membership site, which you'll have access to, where you'll get his complete explanation with his charts, with his drawings, with his research on the fundamental or like the background on the stock and the company. And the idea here, guys, I started off when I first talked to Gianni, I didn't really know what I was doing. Like I had been trading for a while, but very casually. Over time, listening to Gianni, I've learned a lot. I'm a lot more self-sufficient now, and I trade most of my own picks now. But Gianni is doing the work for me, and since I work at Benzinga, I get access to his picks for free. So I dip into that all the time, and it's great. I love him. Like I highly recommend. Not seeing a discount when you click the link. The discount is already applied. It's already applied. You want a pick? Bart says, "Give me a pick, Mr. Neal." The one I'll give you is NMM. I'm not gonna say anything else about it because this is about Gianni, guys. And people that know me know I've been talking about that stock all week. Any more questions about Benzinga Breakout? Okay, so Phil just signed up on the last page, got an error. What do you do? If you guys are getting an error and it seems like it's taking a long time for the page to load, sometimes that happens when we do these sessions because the site gets so much traffic, and it just kind of can't handle so many visitors checking out at once. I would just refresh and wait for it to load for you. And if it's an ongoing issue, email newsletters@benzinga.com. So that's plural, newsletters@benzinga.com for help. And you will get a very friendly representative from Benzinga to help you. And if you get Rodrigo, you're very lucky. Make sure if you guys get Rodrigo, if you email newsletters, if you need help, hopefully everything is self-explanatory. Don't bog us down with the simple stuff. But if you need help if you have a technical issue, newsletters@benzinga.com. And if you see Rodrigo respond to it, make sure you say hi. That's a really good guy there. Why no PayPal at checkout? There should be PayPal. Is there not PayPal? Let me double check on that for you guys. If there's not, I apologize. Oh yeah, there's PayPal at checkout. You can use PayPal. If you're not seeing it, I'm not sure. Try a different browser. Is it strictly shares or options picks? Gianni, this service, Benzinga Breakout, is designed to be as friendly as possible to everyone. So it is just common stock. It is stock picks. But if you are advanced enough to where you understand how to trade options, you should already know how to trade options on his picks. If you're looking for something more direct, more hand-holding, we do have Benzinga options available for you. That might be better for you. But I mean, both are great services. They're a different group of stock, completely different styles. If you get Benzinga options, it's only going to be options trades. That's all it's going to be. Benzinga Breakout with Gianni is breakout setups. It's stocks that are consolidating and are about to blow up. That's all it is. That's what breakout means. Every pick from Gianni comes with an entry price, an exit price, and a stop loss. And as the stock goes up, as the stock is gaining value, he will provide his higher level stop loss so that you're keeping profit is the idea. When you get the full suite, so you're getting breakout opportunities, breakout alerts, which is weekly, and breakout elite, which is 3 picks per week, you're getting to about, this is quick math, but I think it's about 17 picks a month, which, I mean, if you're swing trading more than that, what are you doing? That's crazy. Breakout elite at this discount, I think, is like, I'm just doing quick math off the top of my head. The elite level itself, if you continue through the checkout process and you get to elite and you decide, yes, I want more frequent trade ideas, so I can really try this service out and see if it's a good investment for me, it comes out to about $30 a month. About $30 a month. All of the prices that you will see on checkout are yearly prices. Yearly prices. So the 67-ish number that you see for breakout opportunity, that's like $6 a month, right? Cheaper than that. But we just want you to subscribe on an annual basis. In order to get to the next levels, you need to complete checkout. So you need to submit, you need to actually subscribe to a paid subscription for a breakout opportunity. And then you'll be taken to a page that explains how alerts works. And then after that's just a one-click thing if you want to add that. And then after you add that, you will see elite. This is, I mean, here's what I have to say. Like, people ask us why we do it this way. Investing and trading has inherent risks, and it's a very complex world that's full of all types of different strategies that you can succeed with or fail by. There are so many moving parts. We are doing our absolute best to keep things as simple and narrow as possible for you guys. Okay, looks like someone used PayPal and it worked for them. Thanks for letting me know. The one-time offer that you see on the first page, that little checkbox, if you guys see that, that's just a bonus. That's just a bonus. Just for a one-time payment of $47, you'll get a daily newsletter from the Benzinga News Desk. That's from our reporters. That's where, when there's activity in the pre-market, like extreme volatility on a stock, there's news that happened overnight, some form of press release, announcement, anything like that, that is going to be the theme for the day when the market opens. The news desk gives you, like, I think it's like 4 or 5 stocks and a brief explanation of what happened while you were sleeping, basically. It says these are the stocks you need to watch today. 9 times out of 10, dollars to donuts, one of those or 2 of those are going to be the high flyers for the day. That's just how it works. It's the, I mean, outside the realm of penny stocks, of course, there's always going to be some crazy stuff happening in penny stock world. Can I connect my, oh, that's a Benzinga Pro question. Let's keep all the questions to Breakout, please. I don't want to confuse people. Benzinga has a lot of products. There are a lot of different types of traders of varying levels of experience and skill and style. So it's hard to make, it's hard to have one product that fits for everyone. So in order to not confuse people, let's just talk about Benzinga Breakout, please. The coupon, the discount, if you get Benzinga Breakout, the discount is applied throughout the entire checkout process today. So all of the prices that you see are already heavily discounted. We're slashing like a third off the price. You can cancel anytime and it will not renew. Correct. But there's a if you want to kind of test it out, just grab tier 1, tier 2, 14-day money back guarantee. Get a few of the picks, try them out. Stan says that they had a problem during payment and now have an account, but the service is locked. Now there's a lot of services. Which one should I choose? That sounds like potentially user error, Stan. If you're confused, you can always email newsletters@benzinga.com, and a representative can walk you through the service to help you out. It sounds like you got into the Premium Ideas website, which is right. That's what we want to happen. So now you should have access to Benzinga Breakout, which is Gianni's picks. But you'll probably see some other picks that are locked, and that's because they're other Benzinga products. They're different than what you just got. Are these picks picks/swings for weeks or month holds? Both. It depends. Totally depends. You'll get the explanation from Gianni. What I will say is, with all of our premium idea services, where we have an editor who's providing their portfolio and what they're trading, with research and buy sell alerts, that kind of stuff. The first level is always designed to kind of give you more time, and then as you go up to the second and third tier, they're more aggressive, meaning shorter time frames. So it starts off casual and starts to get a little more, a little more aggressive. Is it possible to trade options for the breakout stocks? Oh yeah, nice name, by the way, Neil PS. Yeah, that's what I do. When Johnny has a good pick and it's breaking out, I right in the morning, if everything else matches my own trading style, my personal trading style, I buy in the money calls, because I like stocks that are breaking out on good momentum, good volume, and then I like to amplify my returns using options. And I like to have Gianni do the work for me. The second level is priced. Yeah, in order to get the second level, so you're purchasing the first one, and then when you see the second level, that should be something around like 200 something. But again, I mean, that's for an entire year. Like, this is just like Gianni said, I look at this like a business cost or an investment. If you don't like it, that's great. Get your money back, like anything else you buy at most good stores or businesses. But I think you're gonna like it. We don't get many complaints. Smiley, I stumbled upon this by accident. Who is Gianni and what is this mainly about? Gianni is a trader, and he just did about an hour of education on how he picks stocks and times his trades so he can make money using the stock market. And right now we're just talking about a subscription service where you can follow what he's trading and also get some education from him so he can teach you how he trades and pick stocks. How is this related to Benzinga Pro? It's separate. It's related to it because it comes from the same company. Parpy, thanks for the question. But I want to keep this about Benzinga Breakout. Isabella, after I clicked PayPal option, it immediately leads me to PayPal checkout. So the other service will also allow me. Yes. If you selected PayPal as your payment method at the beginning, that is the payment method that will continue throughout the checkout process for each product if you choose to get them. And that's what your subscription will renew on an annual basis. Can I rewind this video? I don't know. Try. If you are registered, so if you are in the Zoom session right now, if you registered for this event, you will get the recording delivered to you. You can watch it anytime you want. Pro tip, you can even speed it up. You can change the speed setting so you can watch it at a faster setting. That's what I do. I'm going to drop the link in again because we've got a lot of chats. So I want to make sure that people that want it are able to access it. You don't need a coupon code if you have the link. The coupon code is pre-applied. It is pre-applied. We are making things easy peasy lemon squeezy. When you subscribe to the service, you get the ongoing education. You will never, ever get one of Gianni's picks without education going along with it. You will always get research and a deep explanation of what's going into what he's doing, delivered in a friendly language that anyone can understand. The one-time offer for 47 is just a bonus. That's just a morning newsletter. It's a one-time payment of 47, completely bonus, completely optional, where you'll get the stocks that the Benzinga News Desk. So Benzinga is a news company. The Benzinga News Desk has stocks that they, based on pre-market and aftermarket activity, kind of know are going to be the big story stocks of the day, and you're going to get those ahead of time. Can I sign up for level 2 or 3 sometime later at the same price? I believe Sam asked. To get level 2 and 3 at a discounted rate, you want to get them today. If you get them later, they're going to be full price, which is still a great price. You do not need Benzinga Pro, which is software, to use Breakout. Not at all. In fact, Benzinga Pro is for people that want to be active and do their own research. And Benzinga Breakout is for people that want the research delivered to them. So use Benzinga Pro if you want to pick your own stocks and you're probably maybe a little more experienced in the market, so you know what to look for. Use Benzinga Breakout, which is what this session is about, with Gianni if you're less experienced or you just want the research done for you. There are plenty of people that are very experienced that just don't have time to do the research. And that's what Gianni does all day. What is the advantage of level 2? The advantage of level 2 is that every single Sunday and sometimes Monday, you will get a new, completely different trade. So it's 4 additional trades per month delivered weekly, and they're usually a faster, more aggressive time frame. What is the best trade style for someone who doesn't want to have to wake up before the market opens? Investing is long term, so like years. So you buy a stock, you're going to hold it for years. So that's investing. But I'm assuming you're asking specifically about trading. So what is the best trade style for someone who doesn't want to have to wake up before the market opens? Position trading, which is what breakout is. Position trading, and some people might overlap that with swing trading. But I think really strictly defining it is position trading, which is like weeks to months kind of time frame. Thanks, Parpy. Says thanks for your answers. Subscribing now. Thank you. Okay, so Sam says, okay, so I got this right. Level 1 is breakouts once a month, correct. Tier 2 is weekly picks as well, correct. Option 3 is 3 picks a week on top of all of those picks. That is option 3 is the top and final tier. That means you got the whole breakout suite. That is when you're ready to lean forward in your chair and actively be buying and selling some stocks. So it starts off on easy mode, and then if you're ready to be active, and actually, like, it's not even that active. I don't want to scare you away, but like we designed this so that realistically at any one of the levels, the most work you would ever have to do is 10 minutes a day. I know that sounds crazy, but the idea is that you're looking at what is happening with the price action a little bit before 4 p.m. Eastern every day. Not every day, just on the days that it matters for the stock. And you'll get texts and emails alerting you to what's going on. You do not need a coupon code. The coupon code is already applied. We always get that question. The coupon code is pre-applied. Is Gianni ever mistaken badly? I think that's a really loaded question, and I'll answer it by saying no. Like, all of the trades are based on a system, and the system never changes. If a stock goes down when we hope and predict that it will go up, that's not a mistake. That's just how the stock market works. And that's why you have something called a stop loss. So with every signal from Gianni, you're getting a stop loss, which means there's a price that this stock might go down to. And if it does, my brokerage is going to automatically sell all of my shares so that I don't lose more than this. And that's just part of trading. If you're getting into trading just because you only want stocks that are only going to go up and just make you money all the time, and if there's anyone that's promising you that, they're deceiving you. And there are plenty of people out there that will do that. There are plenty of people on the internet that are completely deceiving you. So yeah, there are picks that will hit their stop loss and they will sell. Gianni's stop losses are always 7 to 8% below his entry price. So on a single trade, the amount that I put in on a Gianni trade, the most I will ever lose is 8% of what I put into it. Not my whole account, just what I chose to put into the trade. ABD says, it says your session expired when adding weekly. Try refreshing. And if that doesn't work, just email newsletters@benzinga.com. After the 14 days trial, can we remove the one-time offer and only keep the breakout? The 14-day money-back guarantee applies to every purchase. So if it's after 14 days, then that's outside the guarantee. But if it's inside the 14-day, let us know, and we'll make sure that you get a full refund. Subscribe to level 1. Tempted to get level 2 as well. I recommend it. This is the way that I look at this. You want to get enough trades to know if this works for you. And how are you going to do that with just tier 1? right? So you want to get tier 2 at least, so you can try these out. Denise, have you done a video on your option subscriptions? That's a separate product. If you go to benzinga.com, you can find it. I want to keep this conversation about Benzinga Breakout though. Just because Benzinga has a lot of products, because there's so many different types of folks out there, I don't want to get people confused, and it's really easy to get confused, unfortunately, with all the stuff that we have to offer. Yes, we have an options product. It's completely separate. Can I just cancel level 2 within 14 days and keep level 1? Yes. Do you see level 2 after submitting payment? Yes. You've got to submit payment. You got to actually get level 1 to get level 2. Again, guys, the market is a confusing and risky place. We are trying to make this as we don't want to just give everyone a car and then put you on the highway and say go. This is a train on tracks. It's very purposefully simple. You do not get access to tier 3 unless you have tier 2, and that's by design. I'm at add 4 weekly trades to your subscription. Is this level 2? Yes, that is. Yep. 4 weekly trades is level 2. Would he be able to help with my existing positions too? No. No, that's financial advice. We're not offering financial advice. We're offering trades that Gianni is making so that you can follow them. And then we're offering education along with that so that you can let Gianni explain very simply all the book learning that he's done so that you don't have to do all that book reading. The notifications come by email and by text if you opt in for text. Like legally, we're not allowed to just send you texts. When you get into the service, you'll see a little like pop up that asks you to sign up for text. What question am I not answering? The success ratio, I don't know off the top of my head. So it's like 17 trades a month over. It's been almost a year now. I would have to get back to you on that. Feel free to message us about that. I'm sorry, I don't know that one. All I can answer is like the basic stuff. Can you explain one more time for additional weekly breakout? Yeah, so the second tier, which is breakout alerts, you get 4 more trades delivered weekly. Completely different stocks, completely different rationale, usually shorter time frames. Gianni's last name is Depoche. All right, guys. Lots of questions still being asked here. Feel free to email in newsletters@benzinga.com. Feel free to check the website for more answers. I'm going to get back to my Saturday. I appreciate all of you joining us. If you are in the Zoom session, you can watch this recording. Watch it back for anything that you might have missed. I'll drop that link in the chat just one more time. And I will bid you adieu. All right, thanks everyone. Thank you. Seriously. You guys are troopers for putting some time into learning about investing and trading during the weekend. It pays off though. The stock market is a wonderful thing as long as you know how to use it.